Let's talk about China, and specifically how the Chinese economy stands out in an unusual way. Now, unlike other major economies where consumer spending contributes, 50 to 75% of GDP, in China it's only 40. Instead, investment in property, infrastructure, and exports make up most of the rest. But this reliance on investment is kind of becoming a problem, not just for China, but for us, for the rest of the world. With China's property investment collapsing, the country's low consumption is now a significant headwind to growth. When Chinese companies can't sell to domestic consumers, they export. It's led to a trade surplus of nearly $900 billion annually. That's about 80 basis points of global GDP. So what this surplus does is it effectively forces other countries to run trade deficits. It's not just the US that's feeling the strain. China's balance of trade with the EU, with Japan, other Asian economies, it's all increased significantly. China's growth model has become confrontational. It relies heavily on investment while undercutting other countries' manufacturing sectors. For instance, while China's accounts for only 13% of global consumption, you know how much of investment it makes up? 28%. Historically, many developing countries used investment and exports to fuel early growth, but China is different because of its sheer size and how low its consumption remains. If China's consumption matched that of the EU or Japan, its annual household spending would be $9 trillion. Right now, it's at $6.7 trillion. That is a massive gap. In fact, it's a gap equivalent to Italy's entire GDP. And so this shortfall creates a 2% hole in global demand. And that strains the world economy. The roots of China's underconsumption lies in its fiscal systems and policy choices. Income inequality, huge issue. Top 10% of households hold nearly 70% of total savings, while a third have negative savings rates. Unlike other countries that address such disparities through progressive taxation, social spending, China does less. Just 8% of its tax revenue comes from personal income tax, with the bulk from value-added tax, which disproportionately it's regressive. It burdens lower-income families. Adding to this, China spends less on health and education compared to other major economies. Surprising. It forces families to spend more of their disposable income on these essentials. Meanwhile, suppressed wages, low interest rates boost profits for state-owned enterprises and depress household incomes and spending. A decade ago, Chinese policymakers recognized the need to shift from investment to consumption. But under Xi Jinping, the country has moved in the opposite direction. Xi focuses on independence and self-reliance, which has led China to produce more domestically and import less, rejecting the traditional principles of comparative advantage that underlie global trade. Some countries may not be better at producing what you produce, but on a comparative basis, it makes sense for you to produce something else, because on a relative basis, they are better. That is the comparative advantage that drives global trade. And so their approach has, more than anything, strained relations with other countries, who now see China as more of a competitor than a customer. Countries like Mexico, Chile, Indonesia. They're considering tariffs on Chinese goods to protect their own industries. We put tariffs on some electric vehicle manufacturing parts to protect from China dumping those products on the US and damaging US industries. Even Canada's recently announced steep tariffs on Chinese electric vehicles, steel, and aluminum, aligning with those moves that we made. Yet despite the mounting tensions, China refuses to acknowledge its underconsumption as a problem. Xi views fiscal support for households as welfarism that breeds laziness, a stance that only deepens the divide. And as a result, the world's already fragile trading system, which we saw how fragile it was with drying up of supply chains in the past couple of years, the world's already fragile trading system faces growing stress, potentially more trade wars, more frictions likely on the horizon.